And welcome to the Daily, Moomoo's morning update on markets. There's a lot happening on Wall Street overnight and in global markets over the past 24 hours. So let's dive into what's going on and what it could mean for your portfolio. All three major US indices bounced back into strong positive territory overnight. The Nasdaq led the way, up 1.2%, followed by solid gains in both the S&P 500 and the Dow Jones Industrial Average. Once again, it was the tech giants driving the change, with Apple out in front. But this time, the rally wasn't limited to tech. Insurance, consumer cyclicals, and defensive sectors also joined the ride higher. The bullish momentum follows a wave of strong earnings reports and bets the US will soon be cutting rates. It doesn't seem to faze investors that we'll see a new set of US tariffs go into effect tomorrow. These tariffs range from 10% to a steep 50%, with Brazil and now India hit hardest by these top-tier levies, some being phased in later this month. For companies with global supply chains, the tariffs will be a worry. But for now, tech and defensive stocks are surging as investors bet they're better positioned to weather tariff-related costs. Now, not all the tech news was rosy. Chipmaker AMD dropped over 6% after reporting a disappointing quarter. Cracks are starting to show in AI data center growth, and concerns over rising competition and tightening margins spooked investors. Meanwhile, Super Microcomputer saw a brutal 18% sell-off. Earnings, revenue, and margins all missed the mark. But on the other hand, it wasn't all gloom and doom. Shopify soared by 22%, as you can see on the chart here on that right-hand side. It blew past profit expectations. It was one of the best performances on the day. The cloud retail commerce platform posted strong second quarter revenue and gave strong guidance for the current quarter. And it helped boost the US retail sector, with Amazon and Walmart up 4%, both of which have reported strong sales in recent weeks. Analysts are taking this news as indication retailers are navigating the US trade wars better than feared. Now let's take a quick look at consumer names that might move the needle overnight. McDonald's popped 3% on strong sales growth. However, Disney disappointed, down 2.6% after missing revenue expectations. And Match Group, the company behind Tinder and Hinge, jumped 10.5% after a strong revenue beat. Moving on from earnings, though, Apple made headlines by pledging another $100 billion into a US-based manufacturing plant. That announcement alone sent Apple shares up 5%. That tells us markets are also closely tracking moves out of the White House. President Donald Trump's upcoming tariff rollouts are front and centre, but there's also chatter of possible Russia-Ukraine ceasefire talks, potentially involving US mediation. And that geopolitical twist could shift sentiment quickly, so it's one to watch. Shifting gears to local markets now, the ASX 200 powered higher yesterday. The rally was driven by cooling inflation data and rising hopes for a Reserve Bank rate cut at their upcoming meeting. And that sent rate-sensitive sectors such as property and finance sharply higher. On the commodities front, gold and silver prices are holding firm, with gold near recent highs just below $3,400. That tells us investors remain risk-averse even as equities climb. Iron ore has edged slightly lower, and that's not causing panic, but is a sign that some caution is setting in. And on the corporate side, strong results yesterday from REA Group and News Corp boosted both stocks by more than 5%. And on the chart here, as we move forward, you can see that REA Group, once again on that right-hand side, a very strong 7% gain. It increased revenue by 23%, and it'll deliver a higher dividend to shareholders in what the CEO described as an excellent year. So what's next? Futures indicate the strong US market performance may not carry over to the ASX today. Our focus is on AMP's earnings, a key test for investor sentiment in Australia. Pokey manufacturer Light & Wonder will also report, and Block will deliver results pre-market tomorrow. If strong corporate results keep coming and the rate cut narrative builds momentum, Australia could emerge as a serious value play in global markets over the next few weeks. That's all for today's market wrap. If you found this helpful, give us a like and don't forget to subscribe for more real-time updates on global markets, earnings and everything in between. See you in the next one.